Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
You came here to hear more about a couple of top stocks? Well, we're not going to disappoint you because we actually have two strategists sitting right at the desk with me here to deliver that information, Kevin Cook and Dan LeBeau. And so, Kevin, we're going to start with you. A name that's familiar to a lot of our viewers here, Alibaba, is what you're looking at.
The Amazon of China, as it were, which I still believe. The stock has had a nice run lately, got back up above 180, but I'm focused on it because it is a Zacks #1 rank because estimates went higher. I'm going to show you the estimates. And also they're going into their annual 2-day investor meeting, which started yesterday, and we'll see. It's in China. So if you want to wake up at 2:30 in the morning, you'll catch some stuff. And that's the story with that. We expect to hear some good news. I'll tell you a touch of bad news in a moment. First, let's break down how Alibaba makes money. This research team called the Trefis Group, this is on Forbes.com, they broke down the revenue segments as well as anybody, and they actually broke out international. So you can see here, China commerce is still the biggest source of revenue. This is for fiscal 2019, which just ended in March. 37 billion, 66% of total revenue. Digital and media, 4 billion, 8%. Wholesale, 7 billion, 13%. International is 4 billion, 7%. And then the cloud is only 4 billion right now, but growing just like for Amazon. Mm-hmm. The thing I want to point out there is with international, it's such a small piece. There's not a lot of commerce between the U.S. and China that is going to be affected by the trade war. So that's a big plus for them. Let's take a look at the estimates. So here I'm on the Zacks detailed estimates page for Alibaba, looking at sales estimates. So I showed you the 56 billion, that summary for 2019. We just had Q1 of fiscal 2020, 42% growth, looking to grow 32% in this fiscal year to over 73 billion. Estimates are it's just going to keep going. They're looking at 31% growth in top line for 2021. And then look at the profits. I mean, you're talking consistent 25% profit growth. And at $7 a share, the stock's trading 25 times. You look out to 2021 next year, $9, stock's trading 20 times. Amazon's never been able to do that, right? Amazon has finally turned on, the revenue crank to let it spill over into margins and profits, but Alibaba is well ahead of them. Last stat I want to point out is China is all about mobile. The Chinese consumer has a mobile device of some kind, and that's how they're interacting with these platforms. For the first quarter, they just reported in August, mobile monthly active users hit 755 million.
Okay. 755
million monthly active users in mobile. That's just amazing, and that was 5% growth from the previous quarter. So, that's the opportunity with the Chinese economy, and Alibaba's at the center of it. So I'm not saying rush out and buy it here, and I think it'll be a $200 stock next year, but it's a long-term growth play. Now, the one piece of bad news that came out this morning that I just found out about is the Chinese government is installing investigators or overseers in companies like Alibaba to keep an eye on things, right? Because they're afraid of the large conglomerates and media companies having too much power. So they're putting a watchdog inside the company, which I think is probably a small negative, but Alibaba remains a central core of commerce for China.
Okay, and this morning is the morning of September the 23rd as we sit here and talk about that. All right, Daniel, you've got a company called Splunk.
Splunk, yeah.
What do they do?
So Splunk's a funny name, but their product offering is anything but. They are a global leader in real-time data management.
Okay.
So they ingest large amounts of machine data and regurgitate actionable results for companies that are using this kind of data.
Interesting.
So they leverage AI and machine learning in order to forecast as well as predict, decision-making processes that's going to help these companies in the future. So I believe this company has been performing under their potential all year. And as you can see here, we've seen some negative earnings throughout the year. Looking at the Q4 earnings late in February, had a negative impact due to a miss on EPS. And then we look over here in May, and we see another EPS miss, which dropped the stock back down to 110. But after each one of these drops, it hit an all-time high following that. And we're seeing the same thing in the most recent earnings report, which was Q2 over at the end of August. But it was a little bit different because we beat both EPS and sales estimates. But the issue that investors had was the acquisition of Signal FX, which is a cloud-based data monitoring system. But I think that there's a lot of synergies that these investors aren't seeing. So Splunk right now is attempting to grow out their cloud. Their cloud only makes up about 13.5% of the revenues, but they're hoping to grow it out much more, and this is a push towards it. And this segment has been growing between 80 and 90% over the last 5 quarters, year over year. So I think this company has a huge amount of potential going forward. And looking at this company's, let me get to this, valuations here, and you can see that their price to sales has been falling over the last 5 years, and this is obviously due as the company matures and gets stronger and stronger margins and closer to profitability, and it's in line right now with the overall software market, but I believe right now is a great buying opportunity. We'll go back to the performance chart here and take a look. Like I was saying, it's consistently been hitting all-time highs after these drops, and I think that these synergies that were created with Signal FX are going to create another all-time high with SPLK, I'm sorry. And I think there's a lot of potential. They have seen over 30% top-line growth since the company's been public, which started in 2012, with the exception of one 22% growth quarter.
And they're just such a leader there, too. I call them a data engine, just like Alteryx, but they're doing stuff for companies that they can't do themselves, right? And then it becomes almost so necessary. Splunk talks about dark data, like companies have 60% of their data they don't even see, all these log files and stuff. And so this is the engine to go find it and model it.
Yeah, and as speed and efficiency become more of a necessity in this kind of digital environment, the need for Splunk and real-time data management is going to become only more necessary.
All right. That said, do either of you own either of these companies?
No.
I own Splunk.
You had to think about it.
Well, because I just sold Splunk, but I'm thinking about getting back into it.
Oh, okay.
I could buy it at any time.
All right. Don't forget, check out more stock information on our website. If you're not there already watching this video, get on over to Zacks.com and start with the homepage. With Kevin and Dan, I'm Terry Ruffalo.